Hey traders, welcome to your Forex Market update. Now in this show what we're going to do is we're going to look at the technical picture for the major currency pairs. Now this video differs a little bit to the Forex Focus in that the Forex Focus is more looking at the longer term picture for the currency pairs. So we look at the same majors, but we're looking at what could take place throughout this week, but also the general direction over the coming weeks and potentially the coming months. And what we're going to do and look at in this video is the technical pictures and the technical levels that potentially are going to come into play over the trading day ahead or the coming trading day or two ahead. So it's a much shorter term view on the markets. One of the things that you have to remember is that this isn't trading advice. So I'm going to highlight the significant levels that you're going to need to look out for. So where the market is trading into, if you should be looking for a bounce from that level or a breakthrough or breakout rather. And then what you'll want to do from there is you'll then use your own strategy that you use for getting into and out of the market. So then implement that particular view with your strategy. So it isn't trading advice, it's more sort of commentary and trying to give you a heads up of the different things to look at, specifically, like I said, from a technical perspective. So with that being said, let's jump into the charts. We will begin by looking at the Aussie dollar. So the Aussie dollar, looking at the 4-hour chart, we're not going to go out as far as the daily. I've already talked about that on the Forex Focus. So, from a 4-hour perspective, if we take a look at this here, we can see that moving averages are kind of coiling. Now, that's an indication that the market doesn't quite know where it wants to go, but it doesn't know where it wants to go from a shorter term perspective. As we spoke about on the Forex Focus from the daily, it's a little bit clearer. If we want to take a position in this pair, what I would say you'd want to do is really not get involved in this sort of chop here, but wait to see if the market can break below, let's say, the low over here. So we've got a temporary consolidation area and it's capped by a low at 0.6259. So if the market breaks below that level, then you can start looking for shorting opportunities. If you're a little bit more aggressive, you can actually, almost look for an entry as the market breaks that level. But as I said before, it's really kind of down to, your decision on how you want to approach these markets and the strategy that you want to implement. On the upside, we've got a resistance level over here at the 0.6364. Obviously, that's a little way off from where the market is at the moment. It's almost 80 or so pips. So if you wanted to take a shorter term position, maybe you're jumping down to the 15-minute chart or the 5-minute chart, then you could look at this downward sloping trend line over here and say, well, if the market breaks above that, you'd look to take an entry. From my personal perspective, I wouldn't take an immediate break there. We've got another resistance level over here on the left at 0.6312. So I'd probably wait for that to be broken before I entered into any sort of a short-term trade. Okay, but if we just very, very quickly jump out to the daily just to look at the longer-term picture, and I prefer trading with the longer-term view, we can see that it is to the downside, although we do know that in the US at the moment, the US dollar is facing a lot of challenges at the moment. So from that perspective, we might see sentiment drive this up. But certainly the technical picture indicates that the higher probability opportunity is going to be a break to the downside. Okay, so let's jump back to the 4-hour charts there, and we will go to the euro dollar. So the euro dollar is an interesting one. I talked about on the Forex Focus last week on Sunday how I've completely sort of changed my view on this one, and I've pivoted to looking for long opportunities over here. From a longer term perspective, I'd be waiting for the market to pull back more significantly from where it is right now. However, if you're trading the shorter term, okay, you have to pay attention to the current trend, and you would say that the market is pulling back to a previous, and this is on the longer term charts, this is like my favorite way to trade, my preferred approach, which is literally just taking immediate bounces off of previous resistance levels which become support, using the ATR as your guide to the stop loss. So what you would have done here trading that is you see that the ATR is 18 pips, so 2 times ATR is a 36 pip stop loss, which would basically you'd enter into a trade immediately as a market hit this level. Your stop loss would be down here, that sort of level, and then on the way up you'd be looking for the market to go towards towards a 1.0922, well, just above there, 1.0924 area for you to be able to take your profits. It's already on its way there, so you're halfway towards your profit target had you have taken that particular trade. Now, looking into the coming session, the market is looking to break up, so you're probably going to have the highest probability trades on the shorter term charts buying this market. If it were to sell off, I wouldn't necessarily start initiating sell opportunities until we get below 1.0888. With the pound dollar, similar sort of picture over here. Okay, so the market is moving to the upside. We do have a large trend there, a big momentum move here. You can see on the 4-hour chart. The way that the market is sort of like playing these opportunities is we had this initial level of support over here, which the market, it drove to a high of 1.2925. It pulled back to 1.2866, then tried to rally from there. It's pulled back to, then you can see that this area the market has kind of bounced away from several different times. So from that perspective, I would say if you're looking to be a buyer and you want to be a little bit more conservative, your best bet will be wait for the market to pull back towards the 1.2865 area. So this support area over here. However, looking at this particular market and looking at the sentiment of the US dollar, it may not get back that far. So if you were more aggressive, then what you'd probably want to do is wait for the market to close above the 10-period moving average, indicating a momentum shift to the upside, and then look for buy opportunities from there. So it really depends on what your lens is. If you're looking at it from a much shorter term lens, you'd be looking for buys from here. If you want to be a bit more conservative, a little bit more patient, which typically is the way that I trade the markets, then you'd be waiting for the markets to come back to 1.2865. The New Zealand dollar is the next one on our radar. The New Zealand dollar is very similar to the Aussie dollar. So we've got this downward sloping trend line over here, which we'll be waiting for the markets to break out above before we start initiating long opportunities. And then on the short side, we will be looking at, eventually, if I can get the level in here, on the short side, we will be looking at the market breaking below 0.5676. So whilst we're in this range, we won't look to take any opportunity. If the market breaks out above, start looking for longs. If it breaks below, then you can start looking for shorting opportunities. Moving to the dollar CAD, this one I think is, I don't see anything great from a technical perspective, and that's obviously to do with what's going on with the trade wars between the US and Canada. So to be honest with you, I would say kind of leave this one for the moment. I wouldn't really look at this today. There's no great technical picture there anyway. There are better ones in other pairs. So for today and probably for the rest of the week or so, we're going to leave this one until we get a little bit more clear price action and it's a little clearer what's going to go on between the US and Canada with regards to the trade wars. Because essentially you find yourself in a situation where you'll take a perfectly good technical trade and then it'll whip you out of a trade for no reason other than, somebody has spoken about something either in the US or in Canada, which has caused the markets to move. So as I said, let's just stay away from that for the moment. Let's be a little bit cautious and focus on pairs where there's more of a direction. Like, for example, this here in the dollar franc. So I still think that in the long term, this will break to the upside. Okay, so I think that this will eventually turn around. But at the moment, we can see that the market is very much trending to the downside. And early on in my career, I used to kind of ignore this technical picture and say, well, my fundamental view is X, so I'm going to trade according to that. But obviously, as I've gained more experience over the past 2 decades in these markets, I've learned that sometimes you just have to follow the technical picture, because the technical picture, for the immediate future is a little bit more accurate than looking at the fundamental picture. The fundamentals will play out and they are more accurate over a longer period of time. But in the very, very short term, the technicals often are going to give you the better opportunities if you know how to go about trading them. Now, of this one here, this is looking like it's going to roll over. There's a few ways that you could play this. Either you wait for the trend line over here to be broken like that, Or you could wait for something that I call a 1, 2, 3 reversal pattern, which is the market coming up, bringing a point A over here, or point 1. The market then comes down, creates point 2, it pulls back a little bit, point 3. So you've got point 1 here, point 2, so 1, 2, 3, and then the market breaks down. And when it breaks down from that level, what you have is you've got a technical reversal on your hand. So you've got a high, a lower high, a low. Then when the market breaks through that low, it gives you a lower low, therefore giving you a technical trend reversal, giving you a technical downtrend, and then you can get in at the beginning of that. With regards to your stop loss, what you would do is you would have a 2 times ATR, so that's 13 pips. So on this one, on the 1 hour chart, you probably have a 26 to 30 pip stop loss. And then from a profit target, you'd be looking for something similar. So you keep yourself on a 1-to-1 basis, particularly when you're starting out, because that's going to give you a higher win rate. And then you focus on being better at identifying the opportunities. And that will get you to the point where at least you're starting to make some profits from your trading. And then you can you can evolve from there. If we take a look at the dollar yen, so this is very, very much to the downside. I think that the technical trend here is going to take quite a little bit to change this for the moment. We have pulled back to a previous level of support here, which is acting as resistance at the 148.64. So you could have taken an immediate bounce from this level. That would have been completely valid, either on the 1 hour chart or the 4 hour chart over here. You would have used the respective ATRs as your stop loss. So the 1 hour, it will be 34.68, around 70 pips stop loss. On the 2 hour, we've got 66 pips there. So you'd be looking at around 132 to sort of like 135 for your stop loss there. And then, as I said before, you would be looking for an equal target. So if you aren't in that, if you didn't take the direct bounce, what I would then wait to do is wait for the market to close below the 10 period moving average, again indicating a shift in momentum to the downside, and then look to implement your favorite strategy based on that. Okay, this video has probably gone on a little bit longer than I wanted it to. I wanted it to be a short-term video for you guys and girls, just a few minutes to give you a technical picture. So hopefully, as we do more of these, I will get better at making it more concise. But I hope you enjoyed it. If you have any comments, please feel free to let me know in the comment section. And then I will see you in the next one. Take care now, and I will speak to you soon.